What's up, guys? It's your Money Cat. In this video, we are going to talk about Google. Now, Google does not usually make big headlines. It's not a very sexy pick, but I was looking around and it surprised me how well Google has been doing within last year, especially comparing it to its peers among the FAANG stocks and just tech overall. So we're going to look at a couple of numbers. We're going to look at its chart and talk about what makes Google so good. First, this is Google's chart, 180 days 4-hour time frame. Yes, it has an overall uptrend, but as you'll notice, it does not have any sort of big major jump or anything like that. It has a lot of just consolidation period, followed by maybe a little bit of upward movement, but then a large consolidation period, a little bit of upward movement, very long consolidation period, upward movement, again, a lot of consolidation period. So this may be one of the reasons why Google is not talked about a lot and that it's not as interesting to talk about as other stocks. I'm not even talking about, those hot SPACs, but just talking about, Apple, Amazon, those even peers among Google. All-time high was at 2152.68, and we're sitting just slightly below that at 2109 right now, even midst of the tech sell-off that we've been having. So I did a little bit of data collection, so let's take a look at it. I compared the triple Q with FANG stocks from February 16th to March 5th. February 16th because that's when the triple Q peaked. And then I also compared whenever that was, all-time high for each stock to the present day. Present day being close of March 5th. So you can look at the numbers, triple Q falling nearly 9% and all the techs selling off. None of them is in the positive territory, but you'll notice that Google only dropped negative 1.98%, or let's call it 2, from this period when NASDAQ fell nearly 9% and everything else also fell. Apple a little over 10%, Amazon almost 10%. And then you compare all-time high to present time, and you can see every single one of the FANG stocks is well over 10%, except for Google at minus 2.04%. So compared to rest of its peers, Google has been doing really, really well. You can say it is peaking at the time where its peers are kind of having a downfall. So I said, okay, maybe Google's just peaking right now and that's kind of skewing the data. So I went back and took a look at how much it dropped during the March sell-off, March 2020. And it was kind of middle of the pack among the 5 FANG stocks. Google was third at minus 33.82%. So kind of average in the middle of the pack. But this number kind of surprised me. So what I did was I took where each stock was pre-March fall and then compare that to present day March 5th of 2021. And surprisingly, Google did a lot better than I expected. Apple was runaway leader at 48.24%, but disregarding that, Google was second among the 5 stocks, pretty much tied with Amazon. Google just doesn't trade a lot. You can see here, average daily trading volume, Google is only at 1.8 million per day. You compare that to all the other stocks on this chart, it is by far the lowest. It is only half as much as the next lowest, which is Amazon at almost 3.7 million per day. Now, this isn't because Google is obviously not a penny stock or, it's not a stock with very low market cap or anything like that. But I think it's just because people who have Google, who have Google stock, they have steady hands or they have a long-term view or they just don't move very much. If they have it, they don't really sell it. So this is kind of more like a Berkshire Hathaway stock where in order to buy one stock for Warren Buffett's company, you have to pay, what was it? I think it's sitting around like $375K per share. So if you want to get in, you really, really have to think about what you're getting into. You're not going to be just getting in and out, day in, day out because it's so expensive. And I think this trading volume reflects that same kind of thought process as Berkshire Hathaway. And this is a really good thing because oftentimes this means Google will not face the same kind of volatility as the other stocks on this chart, especially during a sell-off. And although it may not have big jumps as other stocks on this chart, it does continue going up very steadily. And then overall, when you compare the numbers, it ends up rising as much as the next stock. I mean, at 37.42%, that is ranked second within the last year. So you get top of the line upside among the big tech stocks, yet you're not facing as much volatility to the downside compared to other stocks. That's a win-win situation for a long-term portfolio. If we go back to chart for Google, it's pretty much near all-time high, and we can draw in a support line about there maybe, but we haven't fallen that much. So all the other tech stocks, people are saying, oh, this is a chance to get in. It's 10% off of all-time high, 15% all-time high, or in the case of Tesla, like 40% off all-time high. And you look at Google, it's not even 2% off all-time high. So if you're getting to Google, I think you're getting into stock where you have less volatility to the downside, but still able to match the upside of other big tech stocks, which, I mean, what more can you ask for from a stock, right? Especially from a long-term investment perspective. So Google, not a sexy name, not talked about a lot, even in the media, but the results speak for themselves, and perhaps it warrants a spot on your portfolio.